Welcome back to the channel, everybody. Thank you guys for tuning in. And if you haven't already, smash the like button and hit the subscribe button. Today, let's just talk about how I find dividend stocks and how I analyze them to find out if they are a good company to put money into to start receiving some income. And as you know, your boy got the nice fresh tee on today, different color, get money by income. And let's do this thing. Let's go over to the computer and start finding stocks to analyze that are good dividend paying. And let me just show you guys actually my setup. I just actually got this brand new Mac. Yes, fire. Yes, sir. So that's what we're going to be using today to analyze some stocks. All right, so the website that I use is Seeking Alpha. And as we can actually type, seekingalpha.com. So this pretty much allows me to go into a deeper dive into more statistics on the backgrounds of stocks. I have my brokerage, E-Trade, but they don't have the type of data that I want to be looking at when I do analyze stocks and dividend stocks especially. So for the example, let's just use O Realty. So ticker symbol O. And as you can see right here, Realty Income Corporation, trading at $65. So this is just the initial screen of what you first see when you do actually come to this page and actually put in the ticker symbol. You have the chart right here of the stock price, and then you have some data right here that you could kind of get a glimpse of the company. So they have the dividend rate, just $2.80. So they have the dividend rate, the dividend yield, the market cap, the volume. So the volume just means that people are buying and selling the stock. So obviously if this number is high, it means a lot more people are buying and selling the stock. The market cap is how big the company is valued to the market. So this company right here is worth about $24.5 billion. And as you can see right here, the yield is just this percentage of the dividend rate. The dividend rate in this number is $2.82, and that is by the year. So once you see the dividend rate and the yield, that means that, let's just say, for example, if I put $100 into this company, they're going to pay me 4.31% back on that $100 every single year. So that's $4.30. Now I like to kind of go over dividends right here. This is a section that I click on so that I can see some different things that I want to check out. Like we just went over the dividend yield, the annual payout ratio, 5-year growth rate, and dividend growth. So these three right here are pretty important things that I actually like to look at. So payout ratio, right? So if the company gets paid $1 in profit, they're going to pay out 83.60% of that $1. So that equals to about 84 cents of that every single dollar in profit that they make, they give back to their investors in the form of dividends. I like to look at something that's a little bit less than 70% payout ratio so that there is a healthy balance of, reinvesting profits and paying your investors. But since this company is a real estate investment trust, a REIT, they have to pay out 90% of all their profits to their shareholders. They are legally required to do that. This is why I like real estate investment companies, because you get all of the profits or majority of the profits. So the 5-year growth rate means that the dividend has been growing at this percentage every single year. And has been growing, meaning that the company has been increasing the dividend payout every single year for the last 5 years above 3.94%. And the dividend growth, this is consecutive years that they do pay out to the shareholders. So there are some companies that don't pay a dividend every single year, but there are companies like this one that have been paying a dividend and increasing their dividend every single year for the last 24 years. So you want to see dividend growth is a lot of years, because obviously they've been consistently making money and consistently paying their investors, rewarding them for actually owning the stock. So the last announced dividend, so the amount is 24 cents. This is 24 cents because they pay out every single month. And if you do 12 months in a year times 24, you get $2.82. So for every single share you have, so if you have 100 shares of this company, then you'll be getting out $24 every single month, which is really good if you ask me. Dividend frequency right here is monthly. So I also like to check right here the dividend history. So over the 5-year history chart, as you can see, they've been increasing their dividend at a great pace. 22, 23, 24 now. So as you can see right here, this is when the pandemic hit. When a stock goes down in price, that means the dividend yield tends to go a lot higher. But this is why you want to check all the numbers and everything like that to see if there's any funky business going on. Because usually a dividend trap is when a company is performing really bad, but they try to get investors by paying a high dividend. So that's why when you see 12% yields or 13, 14% yields on dividends for a company, it usually means that there's something going on and there's something wrong, because they're probably just trying to bait people in for, dividend investing so that they can get more money to put into the business. But this one is definitely healthy. We can go down here to the dividend payout history. And as you can see right here, the growth is straight up. I like to actually look at devastating points in history where, they could have easily cut their dividend, they could have easily shut down, and I want to see how they perform during this time period of turmoil or just, the pandemic. As you can see right here in 2020, it happened in March, so January, February, March. They've been paying out 23 cents, and they have been staying consistently paying 23 cents, so that the income stream has stayed strong and that you will continue to get paid out what they said they're going to pay their investors out, and they did not cut it. And up to this year, they are actually going to be increasing it. So this is what I actually like to look for in a dividend stock. Those are just some of the basics that I want to show you guys and to show you how to analyze it. Obviously, there's a lot more work when it comes to looking into a company and how you want to initially get started and finding a company. Then you would have to do more research with the type of annual reports that they bring out and the type of financials that they have on their books, and what type of company is it, what industry that they play in. I would always say, real estate, there's always going to be real estate. There's always going to be people owning the real estate. So you want to have, at least some exposure into a lot of different industries so that you're diversified and that your income stream doesn't get slashed. As you can see, the news before, AT&T, they actually just slashed their dividend in half, and they did a lot of different funky stuff. They sold off their Warner Media, so no more HBO Max. Like, they do a lot of things behind the scenes that make it not a good company anymore. And that's why, I was going to start buying a lot of AT&T, but until they did this move with Warner Media and cutting their dividend, I'm slowly not going to be a part of that company anymore. I will keep the shares that I have, but I probably won't continue to add too many shares more after that because of what they're doing, and the management team obviously has been making bad decisions. So when it comes to stuff like that, you want to pay attention, you want to stay on top of things, you want to stay on top of the news, so that when these things do come out and come to light, you're not naive and you're not, not understanding of why the price is going down or why the dividend is cut. So stuff like that. So thank you guys for tuning in. Please smash the like button and hit the subscribe button if you must. And I would appreciate it so much. And I'll see you guys in the next video. Peace out.